whether you're targeting to get a mortgage loan or just want to be prepared and credit ready for your future. Transform your credit score with a straightforward yet powerful strategy and achieve your desired results in record time. First, we need to understand the 4 key things that impact your credit score, so we can manipulate them to make sure that we're boosting your credit as fast as possible. Payment history. Basically, if you pay your bills on time every month, your score will be affected in a positive way. But if you miss or you're late, your score will go down. Credit utilization. This refers to the amount of credit you're using compared to the amount you have available. High credit utilization can harm your score. It is generally recommended to keep your credit card utilization under 30%. For an example, if you have a credit card with a balance of $1,000, you should aim to keep it below $300. This shows lenders that you're responsibly managing your credit and will have a positive impact on your credit score. Length of credit history. A long and stable credit history can improve your credit score. Types of credit. A mix of different types of credit, such as credit cards and loans used correctly, will benefit your credit score. Secured credit cards and secured loans. With a secured card, you can make purchases and pay your bill just like you would with your regular credit card. If you make payments on time and use your credit responsibly, it would help you improve your credit score. To get a secured loan, you give the bank a certain amount of money, let's say $500, and then they loan it back to you with a payment plan and an interest rate. For an example, if you took out a secured loan for $500 for a 1-year term, you would make payments of approximately $42 per month for 12 months until it's paid off. Keep in mind, this is your money as it is a secured loan. After the final payment, the bank will return all the money to you minus a small fee. In effect, you could also view it as a savings account. That also helps you build your credit. Now on to the strategy. We want to implement a strategy that incorporates all 4 key points that impact your score that we mentioned earlier. One thing to note is that you need at least $500 to do this. Don't worry, you won't lose the money. You'll get it back at the end. But if you want to build your credit quickly, then this is the way to do it. Step 1 is to determine what banks in your area offer the secured loans. To implement this strategy, you need to find at least 2 banks. Once you found your banks, visit the first one and complete your paperwork process. They will require a $500 deposit, which you'll receive back that same day with a payment plan. Then take that $500 and head over to the second bank and repeat the process. Now you have your $500 back and a monthly payment plan of $42 at each bank. Step 2 is to find 3 credit card companies that offer secured credit cards. The first can be for $200, the second can be for $150, and the third for $150. Remember to keep your credit card usage under 30%. After a few months of keeping your credit card utilization low and making timely payments, the credit card companies will begin to return your deposit, converting your secured credit cards to regular credit cards. If you follow this strategy correctly, you'll have 2 secured loans and 3 secured credit cards, all being paid on time. This will help you build a credit history over 12 months by using different types of credit to fill in the 4 key requirements that we discussed earlier. Bonus tip for the secured credit cards. When it comes to credit card utilization, we now understand that the best practice is to keep your utilization under 30%. But if you really want to take your credit to another level, there's an additional trick to keep in mind. While staying under 30% is good, keeping your utilization under 9% can supercharge your credit score. To put this into perspective, suppose your secured credit card limit is $150. In that case, 9% is around $13. To achieve a 9% utilization rate, you could link a subscription service like Disney Plus, which costs $7.99 per month to your credit card, and then put the card away for the rest of the month. Make sure not to use it for any other purchase. Since you're already making a payment for Disney Plus anyway, you might as well take the opportunity to boost your credit score. Building and maintaining a good credit score is crucial for entrepreneurs or anyone with financial goals. Simply put, it's because having good credit gives you the access to funding and resources you need to grow and succeed, whether you're looking to start a business, purchase a home, or just take out a loan for any other reason. A strong credit score will make it easier and more affordable. But building credit isn't just about getting loans. It's also about establishing a record of responsible financial behavior that will serve you in the long run. By paying your bills on time and keeping your balances low and managing your debts wisely, you are demonstrating to lenders and creditors that you're a trustworthy borrower. This could lead to lower interest rates, more favorable terms, and better opportunities for financial growth. Remember, building credit takes time, so be patient and consistent with your financial practices. The rewards of having good credit is well worth it, both in terms of the opportunities it opens up and the peace of mind it brings. Treat it with the respect it deserves, and you'll be well on your way to achieve your financial goals. If you found any value in this video, please show your support by giving it a like. I post multiple videos every week, so if you're interested in finance, self-development, and business topics, be sure to check out this channel.